Hello, this is Patrick White from AA Commodities with your Wednesday, September 9th morning market update. Grain markets are seeing some mixed trade here this morning. We've got December corn down 1.25 cents at 360 and a half. November soybeans are up 4.25 cents at 977 and a quarter. Corn is seeing some lower trade here overnight as the USDA reported crop conditions yesterday afternoon, right in line with traders' expectations, with crop conditions for corn reported at 61% good to excellent, and that was down 1% versus last week, and right on line with traders' expectations at 61%. Traders are keeping corn afloat here on the expectations surrounding corn demand and the lower supplies coming in for the September WASDE report, keeping bulls engaged here on the recent sell-offs. In the WASDE report here on Friday, traders are expecting a reduction in yield of about 3.5 bushels to the acre, down to 178.35 bushels to the acre, and that was versus the 181.8 that the USDA printed here last month. That kind of cut is realistic in my opinion, just due to the dry weather, and that would take the carryout down to a more manageable 2.456 billion bushels. However, obviously we still remain far from a shortage at that level, and that's why it's been tough for the corn market to trade above that 363 to 364 level here so far. The market has realized that damage, is being done here by the dry weather, and I think the USDA will realize that. But we're still definitely far from a shortage here at this point, unless the USDA can surprise us here on Friday. So I think that's just why it's been tougher for the corn market to rally here versus soybeans. Soybeans are higher here overnight, 4.25 cents higher to be exact at 977. Export demand is still the driver in the market at this time. Traders are, they have been trying to sell the market off here yesterday morning, and they did rally after 600,000 tons of soybeans was announced as sold to China here yesterday morning. And that strong demand and just the recent dry weather is keeping ideas about supplies decreasing going into that September WASDE report, and that comes out Friday at 11 a.m. Traders are expecting to see production shrink about 130 million bushels in soybeans due to a 1.5 bushel decline in yield that's expected by the market, and they're also expecting the carryout to decline down to that 467 million bushel area, and that's versus the 610 million bushel printed by the USDA last month. That would be a reduction of about 140 million bushels, and those estimates are a pretty tall order for the market, but I think it definitely could be realized due to the dry weather that we've seen, in Iowa and parts of Illinois, and then also damage from the derecho, which the USDA should factor in as well here in the WASDE this month. So we got a USDA report here on Friday. I'm not expecting any huge great shakes here ahead of that. But the uptrend is still intact here for the time being. So that's all I've got for today, and have a productive day out there. Remember that there is significant risk in trading futures and options, and it is not suitable for all investors. For more information on commodity markets, give us a call at 712-262-7606.